Hey there, welcome back to the channel. Today, we're diving into something that might be on everyone's mind right now, the 2025 recession. Yep, it's a topic that no one really wants to talk about, but if you're invested in the market, it's something you need to understand. So, what's going to happen? How will it impact your investments? And more importantly, what can you do about it? Stick around because we're going to break it all down for you today. We've been hearing a lot of buzz about a potential recession coming in 2025, and while it's not a guaranteed thing, it's definitely something you want to be prepared for. If you've been keeping up with global markets, you might have already noticed some signs: rising inflation, interest rates, and economic instability in various parts of the world. These factors all point to the possibility of an economic downturn, and it's important to understand how that could affect your investments and what you can do to protect your wealth. First, let's talk about what a recession really is. A recession happens when the economy shrinks for 2 consecutive quarters or more. You'll see drops in GDP, a slowdown in consumer spending, and rising unemployment. Now, the stock market doesn't always mirror the state of the economy exactly, but the two are closely tied. So, when a recession hits, you'll likely see the stock market respond, stocks drop, investment returns slow down, and overall sentiment can be pretty negative. Not exactly the most fun stuff to think about, right? Now, let's get into how the 2025 recession could impact your investments. Whether you're into stocks, real estate, crypto, or other assets, you're probably wondering what will happen to your portfolio if the economy slows down. Let's break it down. 1. The stock market and recession. The stock market is the most obvious place where you'll see the effects of a recession. When companies start to lose profits or experience slow growth, their stock prices often fall. And when uncertainty takes over the economy, investors tend to get nervous and sell off stocks, which causes even more downward pressure. So, during a recession, you could see broad market declines. But here's the thing, that doesn't mean you should panic. During past recessions, the market has gone through some rough patches, but it has always bounced back over time. The key is not to make impulsive decisions out of fear. Sure, the market might drop in the short term, but it's essential to think long term. If you've got a well-diversified portfolio and you don't need immediate access to your funds, the best thing you can do is stay the course and keep investing. Recessions can actually present opportunities for long-term investors. As stock prices fall, you may be able to pick up shares at a discount, which could pay off in the future when the economy recovers. So, if you're focused on the long term, recessions don't have to be scary, they can be a chance to add to your portfolio at lower prices. 2. Real estate and a downturn. Now, let's talk about real estate. Historically, real estate markets tend to soften during recessions. When people lose their jobs or face economic uncertainty, they may not have the same buying power or interest in purchasing homes. That can lead to falling home prices, a slowdown in construction, and an overall cooling in the market. So, if you're thinking about buying a home or investment property in 2025, you might want to wait and see how things shake out. However, if you're an existing homeowner, a recession might bring some challenges, especially if you've taken on significant debt. If the economy takes a dive, you might see a drop in home values, but typically not a huge crash unless there's a massive financial crisis. That said, mortgage rates are a big factor in today's market. During a recession, central banks may lower interest rates to stimulate the economy, which could help keep mortgage rates low and make housing more affordable. But this can vary depending on the nature and severity of the recession. For investors, a recession could create opportunities to buy rental properties or commercial real estate at a lower price. But remember, cash flow is key. During economic downturns, tenants may struggle to pay rent, so be prepared for the possibility of vacancies or delayed payments. If you have the resources to weather those periods, you might be able to pick up property at a bargain. 3. Bonds and safe haven investments. Next up, bonds. Bonds are generally considered safer investments compared to stocks, especially during times of economic instability. In a recession, investors often flock to bonds, particularly government bonds, because they offer a more predictable and stable return. When the stock market takes a dive, bonds tend to hold their value, and in some cases, their prices might even go up as demand rises. Now, that doesn't mean bonds are entirely risk-free. If the recession is accompanied by high inflation, bond yields might be lower, and their real value could erode over time. But for the most part, bonds can provide some stability when your stocks are feeling volatile. If you're looking to protect your wealth in 2025, consider increasing your allocation to bonds or other safe haven assets like gold. 4. Cryptocurrency and recessions. Crypto is one of the more unpredictable assets out there, and it's especially tricky when you think about how it might respond to a recession. On one hand, some investors believe that Bitcoin and other cryptocurrencies could act as a hedge against inflation and economic instability, much like gold. But on the other hand, crypto is still a very volatile market, and during a recession, we might see panic selling just like with stocks. In fact, in previous economic downturns, the cryptocurrency market has proven to be quite sensitive to broader market trends. While it has the potential to rebound quickly when the economy recovers, it can also experience steep drops when investor sentiment turns negative. So, if you're invested in crypto, be prepared for the possibility of some wild swings during a recession. One of the most important things to consider with crypto is that it's still relatively new in the grand scheme of things, and how it will perform during a recession is still uncertain. If you're thinking of doubling down on crypto in 2025, make sure you're comfortable with the risk. The potential for huge gains is there, but so is the possibility of big losses. 5. How to protect your investments in 2025. Okay, so what can you actually do to protect yourself and your investments from the 2025 recession? Well, here are a few key strategies to consider. Number 1, diversify your portfolio. One of the best ways to protect yourself from a downturn is diversification. Spread your investments across different asset classes, stocks, bonds, real estate, crypto, etc. That way, if one area takes a hit, you have other areas that might still perform well. The more diverse your portfolio, the less likely it is that a recession will wipe you out. Number 2, stay focused on the long term. If you're investing for the long haul, don't let short-term volatility drive your decisions. Recessions come and go, but if you've invested in solid companies or assets that you believe will thrive in the long run, stick with your strategy. Don't let fear force you into making bad decisions. Number 3, build an emergency fund. During a recession, job security can become a concern, and your income might be affected. Having an emergency fund in place is one of the best ways to protect yourself from unexpected financial shocks. Aim for 3 to 6 months worth of living expenses, so if things go south, you'll have a cushion to fall back on. Number 4, consider defensive stocks. In a recession, certain industries tend to perform better than others. Healthcare, utilities, and consumer staples, things people need no matter the economy, tend to be more recession resistant. So, consider adding some of these types of stocks to your portfolio to help balance out the risk of more cyclical industries. Number 5, rebalance regularly. Make sure you're rebalancing your portfolio as needed. During a recession, some of your investments might underperform, so it's a good idea to regularly review your portfolio and make adjustments based on your financial goals and risk tolerance. To conclude it all, here's the bottom line. While a recession in 2025 might bring some short-term challenges for your investments, it doesn't have to be the end of the world. The key is preparation, patience, and smart decision-making. Keep a diversified portfolio, focus on long-term goals, and consider adding more stable investments like bonds or real estate into your mix. Are you worried about a recession, or are you seeing it as an opportunity to grow your wealth? Let me know your thoughts in the comments below. And if you found this video helpful, make sure to like, share, and subscribe for more insights on navigating your finances. Stay safe out there, and I'll see you in the next video.